Welcome to Market Matters. My name is Kusa Chong and I'm joined by Wei Lin Tang and Charlotte Chong. Today, third day of gains. I'm not sure whether it's a technical rebound. The local funds appear to be buying. The foreign funds appear to be selling less.
Well, Chong, it's actually fresh or absence of any positive news in the market. So, I mean, it could be a technical rebound, we won't know. But analysts and UOB today has actually come out to say that it's actually advising investors to actually have a cautious approach towards investing, because you will never know. Tomorrow you might see the index going down again. And this is because external environment has a lot to play with the CI.
It does. Let's get a closer look from that on Charlotte Chong.
Yes, guys. Finally, we saw KLCS sustaining an upward trend for the third consecutive day. Today, it climbed 1.35% to close at 1,601 points, above 1,600 points. Last week, it was 1,500, below 1,600 for the entire week. Local buying is still strong. Local in-state participation was at 44%. Just now I took a quick look at Bursa. Turnover at 2.11 billion, worth 2.3 billion ringgit. TA Research actually says despite the rally on Wall Street yesterday, market volatility should stay elevated. What that means was analysts and fund managers, they're not convinced on the recovery as the overall market economy is still
the Federal
weak.
Reserve now making mutterings and mentioning perhaps that they might not actually raise rates in September. Now that's actually going to be very good for the market.
And they won't raise rates partially because of China, right? You know, with them devaluing their currency and with the growth it's in place.
Well, you know, you never know, right? Because I think what happens is they're basically going to kick the can down the road and they're going to say, look, you know, it's supposed to raise the rates in September. Let's take a look and see what happens with China and the growth concerns there. I mean, right now it seems to be very much a technical bounce on the market side.
So just now when I mentioned about the overall weak sentiment, and when I look at local ringgit still continues its losing streak. Now it was traded at 4.21 against the US dollar, but we saw a sea of green today in the ASEAN region. Shanghai Composite Index up 5.34%, CSI 100 Index climbed 6.66%, Jakarta's gained 4.47%. It's pretty good, the overall picture. Brent added 2.67% to 44.3 US dollar per barrel on unexpected fall of US stockpile. And CPO price has also gained 1.2% to 1,890 ringgit.
Yeah,
Back to you guys.
I think basically the oil price is going to drive directions to the ringgit. I mean, you know, basically if you want to see a direction for the ringgit, you've got to see a direction. You've got to take cue from the oil prices. And every time you have oil prices rise due to unexpected data, then you're going to see a spike in CPO as well.
Yeah, that's right, Chong. Also on the country's economy, right, GDP growth, it sort of ties in because the local stock market is also, you know, a function of how the country is growing. And for the second quarter, we did see private demand all actually not up to par. And this is private demand is supposed to actually be spurring the country's growth.
Yeah, I think we'll see a bit of that in terms of Maybank's earnings. We'll be talking about that in a few minutes. But thanks for that, ladies. Let's move on now to our hot stock of the day. Our hot stock of the day is MMC Corporation Berhad. Their shares closed up 3% to 165. Reported quarterly earnings, second quarter, nice bounce. What happened?
Well, Chuang, MMC reported its second quarter net profit. It was up to 1.35 billion ringgit, and this is versus 165 million ringgit in the previous year's quarter. But now, out of this 1.35 billion ringgit in net profit, 1.34 billion ringgit is actually from its gains from actually listing Malakoff.
Yeah, of course, Malakoff is a power company, one of the biggest IPOs of the year. But the thing is, operationally, they didn't have too good a year. And I think one of the issues with MMC Corp is they've got so many businesses under their umbrella. They've got Post Malaysia, they've got Proton, they got they got Malakoff. I mean, what really is MMC Corp to you? Well,
there's actually three divisions if you could break it down, right, Chong? So there's the energy and utilities, which is the largest driver, contributing, I think, up to 60% of group revenue. Then there's ports and logistics. And the third one would be the engineering and construction, which owns a stake in Zealand Berhad, also a listed company.
Yeah, I think what they want to do is control the monopoly board, right? Because they've got Penang Port, they've already bought. They've got PTP in Johor, they've got Johor Port down south. They want to buy over Northport, but they want to list it. But before they can list it, they've got to get PNB's approval before they take over the whole port outright. And I think that's the problem.
That's right. So MMC actually now effectively owns 30% in NCB. But I think Kenanga Research has actually come out to say that it's unlikely that you will see a general offer because of MMC's high gearing. So just to give perspective, MMC after listing Malakoff, right, its gearing has actually dropped from about net gearing from about slightly more than 2 times to 0.65 times. And this is as at June 30th. Its latest numbers.
Of course, and I think Malakoff is a different entity, totally. It's a listed entity, and of course their quarterly earnings are quite weak as well, but that's of course a story for another day.
Would you buy MMC though, Trump?
Would I buy MMC? You know, the whole issue with MMC Corp is that A, they got too many businesses, B,
are they not looking well to the businesses?
Debt levels are too high, and number 3, you know, they've got this kind of like stigma in terms of the political connections with Tan Sri Sai Mokhtar Al-Bukhari. So I mean, as a conglomerate buyer, I wouldn't be near it right now. But
I looked at some reports. Yeah, analysts actually they are saying that because MMC's share price has been bashed down, right? So it's actually currently trading at about 10, 11 times price to earnings.
Of course.
And also they are foreseeing a better second half. Affin Fang, for one, actually foresees second half to be better because it sees Gas Malaysia should see higher profits.
Well, I'm afraid we've got to end our look at MMC, but stay right there because we'll be back with a counter that's been moving, but in the wrong direction.